Welcome back everyone, and today we're going to do a bit of a fun acronym challenge where we're going to be going through 49 property acronyms and seeing if I get them right. Grab your pen and paper, let's get through as many as possible in the next 10 minutes. ARLA or ARLA is the Association of Residential Letting Agents. Essentially, it's a course by Property Mark to give letting agents the stamp of approval going out there and looking professional to the open market. ARMA is the Association of Residential Management Agents, very similar to ARLA, and again it's the stamp of approval to the open market. Article 4 is a restriction to permitted development in an area where you'd automatically get the planning. In an Article 4 area, the local council has the right to restrict and reject any of those planning movements. AS is an assisted sale, so instead of buying, refurbishing and selling on a property, the person that owns it moves out, you don't buy it, you refurbish it, sell it and share the uplift in the property with the owner. AST is an assured short hold tenancy, typically there for a 6 to 12 month period, but they can be up to 3 years for a tenant to legally occupy and rent out a property. BMV is below market value, essentially where you are getting the property purchase price agreed below the open market value of the property. BRR is when you buy, refurbish and then refinance a buy-to-let property. BTL is a buy-to-let property where you're purchasing a single residential dwelling and renting it out to an individual. BTS is buy to sell, where typically you're purchasing a property, refurbishing it and then selling to the open market. C3 use is for a residential single dwelling purchase in the UK. C4 use is still a use class in the UK system, but typically for a small house of multiple occupancy. CGT is capital gains tax. It's a tax in the UK for when you sell a property and you realise a profit with it not being your residential dwelling. ComCon is any sort of commercial to residential conversion. Typically people say it when they're talking about office to residential, but it can include pubs or indeed retail units. CRM is a customer relationship manager, where essentially it's a piece of software where you can log all of your customers' data. DIP is decision in principle. You may also see AIP, which is agreement in principle, and MIP, which is mortgage in principle, and essentially it's where your lender is agreeing in principle to lend you money for your next property purchase. DUV is the done up value of the property, so you're essentially looking at the value of the property once you have refurbished the investment opportunity. EPC is an energy performance certificate, which is a graded certificate when you purchase an investment property or residential property in the UK. So a flip is typically when you buy, refurbish and sell a property, but it can include a trade where you're buying a property below market value and then putting straight onto the open market for a profit. GCH, you'll typically see this listed on with an estate agency, and what it means is the property has gas central heating installed in the property. GDPR, I always get this wrong, it is the General Data Protection Regulation, and it's essentially around protecting your customers' data. GR is ground rent. Essentially it's when you purchase a leasehold property and you are paying for the land that's underneath it to the freeholder of the overall property. HMO is a house of multiple occupancy. It's essentially where 3 or more unrelated parties live in the same property. When you indemnify, or an indemnity is essentially when you get an insurance policy against an unknown quantity when purchasing a property. An invoice is when you put something in writing requesting payment for a product or service you have or you are going to deliver. A JV is a joint venture, the most typical of which is when one party brings the money to a deal and the other person puts the time and experience into the deal, and you split the profits 50-50. LHA, which used to be known as DSS, is local housing authority or local housing allowance, and essentially what the council is willing to pay as a set rent for 1 bed upwards in your local area. LO is a lease option, which is where you have the right but not the obligation to purchase a property at any given term or timescale. LTV is the loan to value of a property, which is where you purchase the property and you get mortgage debt towards it. So a memorandum of sale is putting in writing, typically to an estate agent or a solicitor, the predominant details of a property, including the purchase price of the property, the full address, whether it's a freehold or a leasehold, and the purchase price and how long you're looking until the completion date. NLA is the National Landlords Association. Essentially, it's an association that you can opt into as a landlord, and of course seeking legal help if you ever do get in trouble with your tenants. NMD means no money down, and is the biggest bullshit in the property game that you'll hear. It's marketing, or you're using tactics like lease options, rent to rents, etc. OIEO is offers in excess of. You'll typically see it listed by estate agents where they've put on a property at what they think is a competitive price. OIRO is again with estate agents, and it means offers in region of. This is typically where a property is listed and maybe the vendor is a little bit more open to an offer and they're looking for something in the remit or region of the price that they've indicated online. OMV is the open market value of the property, and this is typically what the property would achieve given all of the marketing channels allowed to it, such as Rightmove, Zoopla, on the market, etc. An onward purchase is essentially talking about the property in the chain of properties where you're buying, the person selling, and then they're buying another one. PA is prior approval, which is usually used in line with permitted development rights. PD is relating to permitted development rights, and there are some areas that come under PD. POA is price on application. You'll usually see it on Rightmove. It's very rare with residential property. You'll usually see it with industrial units where it's quite a large portion. R2R is a tactic used in property, not a strategy, and it's called rent to rent, and it's a contract that you essentially apply to any property. It can be residential, buy-to-let, HMO, could be an office, could be anything, where you rent out the property as a whole and then typically rent out the individual rooms or units within an office. RICS, or RICS, is the Royal Institute of Chartered Surveyors, and it's most commonly known as a RICS report, and that's when most people talk about it. And it's when you're looking to get an accurate or official value on the property that you're either purchasing or indeed that you own and wanting to get a true value. ROCE is either return on capital employed or return on cash employed, and it's essentially the net return that you are getting on the cash left in the property investment. So ROI is the initial return on your investment. SA is service accommodation, also known as holiday lets. It's where people get a unit, typically residential, and then they'll rent it out either on Silverdoor, Airbnb, or Booking.com and charge on a nightly basis. SARB is a sale and rent back. A lot of people think it's illegal in the UK, but it's absolutely not. SC is normally service charge. Again, it's when you purchase a leasehold property, typically in a bigger block of flats, for example, and you are paying a monthly service charge for what the freeholder is contributing to the communal areas. SDLT is a stamp duty land tax, which is a tax apportioned to you purchasing a property, and it goes up in bands from £40,000 and above in the residential sector. STC, or what you'll commonly see is SSTC, is sold subject to contract. TB is tenant buyer. Essentially, it's where if you own a property or you've got control of a property, somebody will move in for a short to medium term, typically around 5 years. They will pay you a rent on the property, but also agree a price today to purchase the property at any point within that agreed term. Yield is defined as a percentage return on a gross basis and is usually worked out by your yearly rent over the purchase price of the property. So there you go, 49 property acronyms, so you know what you're talking about when you go out there. What ones did I miss? And out of interest, how many did you know? Go back, watch it again, keep track of it, and let me know your figure out of 49, and we'll see who wins the challenge.